All right, this is very, very important, particularly for all of you crypto folks out there who are looking for ways in the future to off ramp or where you keep your wealth. US banks are in serious danger right now, and you need to start making decisions that could save you and your family from potential disaster. And sounds serious, right? That's because it is. Don't get fooled into thinking that this is a conspiracy theory. This is very real. It's on our doorsteps, and it's something that's happened in a multitude of other regions in recent years. Now, I preface this in saying that we can always take what the Treasury or Jerome Powell say at face value, and many have many times in various jurisdictions around the world, and ultimately have come to regret it. As the saying goes, you can always polish a turd, but it doesn't work. And that to me is very much the situation we find ourselves in right now, hearing the current predictions of the state of the economy ahead of us. Listening to the latest from Jerome Powell and crew, here is my take in a nutshell. And yeah, I am going to summarize a great deal here, knowing that there are a multitude of other variables involved. But to me, I'm going to focus very much on what matters the most to us in the here and now. Banks are only required to keep on hand 10% of what you or I invest, meaning the other 90%, they are free to do with what they want. This is how the banking system works. And it's because of this leeway banks are given to invest our money, usually in pretty safe places, that allows us to gain access to larger amounts of money in the form of loans and even is responsible for any percentage rates that we've seen from our check-ins or savings accounts in years past. However, for the most part, in recent times, they've been aggressively investing into the commercial real estate and loan sector. And things aren't going so well in that sector. Again, to summarize greatly, interest rates that were once held very, very low for those loans to help recover from the pandemic have now changed. And those rates are now very, very high. Indeed, rates have been raising recently at the fastest rate in the entire history of rate raises, rendering investment models and business models alike within the commercial real estate sector as unsustainable for most and catastrophic for others. Because of this, lots of large banks are going to suffer, but also a large percentage of this strife comes from smaller regional banks that have not been deemed too big to fail by the government. And so, according to Jerome Powell, if you read between the lines, is going to amount to a whole host of banks being merged or closed out of existence. In fact, that's almost word for word what Jerome said. So you don't even have to read between the lines for that. On top of this, the US is already on an unsustainable fiscal path with debt growing much faster than the economy. Some have been thinking of this as more of a long term crisis and they've buried their heads in the sand. Others now seem to be realizing that things are coming to a head a lot faster than anticipated. And the attempts to cover this crisis up or soften the impact of our perception is going to be harder and harder as we go forward. Interest rates, apparently, are not going to come down anytime soon. Beforehand, they want to see inflation get to 2%, which right now is a tough ask, in my opinion. Jerome Powell has already stated the rates will not be coming down in this planned March meeting that they have. But he does say there's a chance maybe for this year. But even then, we're only looking at a mere 0.25%, which of course isn't going to achieve much in terms of affordability for most. All this crazy inflation that we've been seeing, that's here to stay, or rather, the result of it is here to stay. Prices won't go back down to the way they were for anyone thinking that they were going to. It simply doesn't happen like that, except in very negative circumstances that, of course, come with a whole host of major issues. So, what does this mean for us? It means we need to, one, protect our money and our net worth. Two, realize where the opportunity is for us. For all of us investors that are always looking for a silver lining, we know that when strife like this comes, it also brings with it a lot of opportunity. In terms of protection, I want to touch on something that we should be thinking of even prior to these pending banking fails, and that's unbanking ourselves from the US system as much as we are able. And what I mean by this is taking your funds and your value out of these US banks and storing them or putting them to work for you in other outlets. Now, this isn't rocket science. We're looking at outlets like offshore banking, strategic real estate, and of course, our beloved crypto. All of these things are extremely doable for anyone. If you want to learn more about how to achieve this, feel free to subscribe here, join our private group, where I'm actually currently working on some things that allow you to do exactly this in a very preferable manner. It's not an easy thing to navigate, but when you get a bit of education about it, you'll see how feasible it is. Now, when it comes to utilizing our banking system, you've heard of the importance of using other people's money for certain investments, right? Well, I would urge you to treat the bank as a tool for leverage. We all talk about the dangers of leveraging things like your crypto positions. That doesn't hold true for our traditional finance vehicles. This is how wealth is made. If you have good credit and you've been busting your ass in your day to day job for years, use that. That's how wealth is created. Don't keep your funds there right now, but utilize the system as much as you can for sure. What does this mean for investment options? Well, for one, with so many that will no doubt default on their loans. Unfortunately, we may see commercial real estate come down in value and be sold by the banks for a lot less due to the profit available for typical business models with higher rates factored in being lower. And so the value analysis in particular properties will make for a lower priced result. And so it may be a good idea for those with money on the sidelines and are able to scoop up some great deals in the hopes that rates are cut significantly in the years to come. It's more of a long term play, but it's definitely something to bear in mind for those of you lucky enough or you've worked hard enough through traditional means to have that money sat on the sidelines and are looking for somewhere to put it that would be better than simply keeping it in your bank. The easiest and most opportune investment right now, in my opinion, well, you probably guessed it, crypto. We're on the precipice of a giant bull market. You saw my last video on making money when you buy versus when you sell. With so many solid crypto options in play, with the TradFi exodus of money transferring over to the crypto arena, being able to buy positions into crypto that are undervalued relative to what we can expect from the bull market is an extremely easy endeavor right now. Don't pick the duds. Make sure you're not rolling everything, gambling on those lottery ticket wins. But if you're doing your due diligence, there are some real solid options out there right now. Pulsechain is one of them. Not only are we set to see some huge price appreciation that will keep our investments not just above inflation rates that we should all be doing, but lots forget about, but also show us multiples in our return. But we also see the store of value that was once directed to assets like gold in predicted times of turmoil in the past, like now, shifting to that of crypto, in part, of course, due to all of this institutional engagement that we're seeing. Look, in times like this, people are usually uneducated or they put their head in the sand and they're not able to read the winds. Or they get lulled into a false sense of security by the powers that be who are still applying old methodology to what is essentially a rapidly changing financial landscape. This is dangerous, and you need to protect yourselves before the government makes it very difficult for you to do so. You've probably seen in the last video me encouraging you to act before the government close the exits to your bank account, as we've seen in other regions. That's inevitable. So the sooner you act in this regard, the better. And while I'm talking about the US right now, you should be doing this in any region you are in. I mean, the US is the mother of all markets, of course. It's huge. It's a global leader in setting certain trends. So it's not too hard to envision other regions following suit pretty quickly. Now, this is only my opinion, but I feel assured in saying that traditional banking is in a dangerous predicament right now. And planning an exit strategy now is a very good idea for pretty much anyone. The solution really isn't difficult. And when done correctly, you should still be in a position where you are free to leverage this banking system with loans and wealth growing opportunities while still ensuring that your value, that your net worth is de risked accordingly. I hope this helped. Feel free to leave any comments in the comment section, things you want me to touch on. I am looking at them, so please don't refrain from leaving anything. But ultimately, stay tuned for more because this is a message that's probably going to get more and more serious as we come closer and closer to this inevitability.